Welcome back. The GIFT Nifty is suggesting that our markets could open in the red for the third consecutive session now, currently down close to about 73 points. What about individual stocks? Our entire research team is standing by, dressed in their finery, for CNBC-TV18's Top 10 list of stocks for the day. Good morning, everyone. Vivek, let me start with you on ABB.
Well, that's right. Post the results of ABB Global and the commensurate commentary, a few concerns had emerged as to the order inflow activity as far as, the Indian operations were concerned. But post the results, all of those concerns have been put to rest. Very strong set of results, strong double-digit growth in terms of revenue as well as profitability across all of the segments. Now, and, it's also a significant beat across the poll. Now, revenues largely in line, coming in over the 2,500 crore mark, up 22% on a year-on-year basis. But the core EBITDA is where the big part of the beat has come in. EBITDA stood at 348 crore versus our estimates of just around 306 crore, a significant beat there. And the EBITDA margin came in at 13.9% versus an estimate of 12%. So strong margin expansion too happening. Along with that, profitability too, above estimates, 295 crore versus our estimate of around 247 crore. What are the margins aided by? Margins were largely aided by better operational efficiency, cost optimization, as well as improved price realizations. Talking about the order strength, the base orders grew just around 4%, but one large order win in the metal segment is something that aided the order book this time around. Strong set of results from ABB, going with the green on this particular name.
Okay, all right. Thanks a lot for that, Vivek. So green on ABB. But let's hop across to Sonal. She's here to tell us about ONGC's numbers. Morning, Sonal.
Good morning, Nigel. Well, green for ONGC as well because it was a top-down beat versus our poll and a good recovery that we saw on a sequential basis despite the fall in crude oil prices. Revenues were down 6.8%, but EBITDA was up 49.5%, leading to a margin number of 57.5% versus 45%. Profits also came in at 10,015 crore rupees versus a poll of 8,400 crore rupees and a big uptick on a quarter-on-quarter basis as well. Crude oil realization after the windfall taxes that the government levied came in at $73.6 per barrel, largely in line with what the street was working with. CLSA has a buy rating with a target price of 225 rupees per share on the stock. They say that the company guided for liquid production to start from their KG D6 basin. This is in next 3 to 4 months itself, one of the blocks there. So if this comes on stream, it could add 12% to ONGC's current domestic oil production and 20% to gas production at peak levels. So that is a positive commentary that we got in. Expect the stock to do well in trade today.
All right. Well, I think it's Morgan, this morning has put out a note as well on ONGC. We'll discuss that in greater detail as we go on. Thanks very much, Sonal, for that. Glenmark Pharma is the next one, was reported. Ekta's got details. Ekta, morning.
Thanks for that. I expect that stock to be in the green today. Revenue up 22%, margins at 18.5%. Street was anticipating 18%. Profit of around 150 odd crores. That was lower because of finance costs as well as depreciation. India was up only around 2.8% year on year. That was because of divestment of brands, the NLEM impact. But the US sales did better, $98.4 million. It improved on a year-on-year basis. And it was largely a little lower than what the street anticipated. But Europe was very strong, so it was up around 73.7% on a year-on-year basis. Now, the reason I'm going with green is because of the stronger revenue growth. But do remember that the stock is already up 1.2 times from its 52-week low, is just about 4% away from its 52-week high. Also, the earnings call is at 9:30 a.m. So the trajectory of this entire piece could change once the company does talk to analysts.
Okay, all right, Ekta, thanks a lot for that. Well, I'm watching two stocks, JSPL as well as NMDC. Let's start off with JSPL. The only problem with the numbers, it seems, the street sensed it. Because on Friday's trading session, well, the Nifty ended virtually at the low point of the day, but JSPL ended at the high point of the day. So it seems the street was really, sniffing some good numbers. Anyways, that's about the stock price move. But on the numbers, well, on the top line, there was a marginal miss out there. That's only because the volume growth maybe was not as much as expected, very, very small. But just take a look at the big beat we're seeing on the EBITDA front. EBITDA and margins looked very, very good. The key reason out there for the beat was realizations were up by close to 100% on a sequential basis. They had 10% of their sales volume as exports, and that gave them better realizations. So that was one of the reasons the street was working with a bit of a contraction. The management says as well, bulk of this EBITDA improvement came in because of the cost initiatives, and they got the benefit of lower iron ore cost as well as some part of lower coal cost as well. The standalone EBITDA per ton, well, the street was working with a number of around 11,000 rupees. It's coming at around 14,400 rupees. So that's clearly a big beat out there. And to add to the good news, The net debt level has come in at its lowest we have seen in the last 15 years. It was down marginally even on a sequential basis. The PAT number, by the way, looks much better, but that's because the tax was effectively lower. Moving to NMDC, those numbers as well were pretty good. The top line, the EBITDA number as well as margins, well, they looked quite good. And it's a top-down beat out there, but just marginally so. The reasons for that is volumes numbers we almost had with us. That was up by close to around 40%. But realizations on a sequential basis were up by close to 4%. Royalty on a per-ton basis and other expenditure on the per-ton basis were down between 20 to 30%. So explains why the operational performance as well looked much better than what the street was working with. Expect both these two stocks to open up in the green. But let's get back to Abhishek. He's standing by to tell us about Muthoot Finance. Abhishek, morning.
Morning. So for Muthoot Finance, the gold portfolio is shining this time around. AUM growth on a YY basis at 19.3% is perhaps one of the best in last 8 quarters, and a 7% sequential growth is seen. Gold AUM growth is about 17.5% YY and about 6.7% sequentially. Calculation shows that the average gold loan, which is there in terms of ticket size, has grown by 12.35% YY and 5% sequentially. This indicating that the higher gold price has driven the gold AUM growth this time around. Asset quality, slight hiccup over there, which is seasonal in nature. Net interest margin has come in at 11.58% versus 12.26% in the previous quarter. Operating profit growth is strong at 36.75% YOY and about 8.5% sequentially. However, on the flip side, the home finance subsidiary, the capital consumption is pretty strong or pretty robust over there, which is a negative sign. It is coming at 52% in terms of capital adequacy ratio, which was at 66% in the previous quarter. And in terms of Belstar MFI, their performance is also strong. The AUM growth is more than 49% YOY and about 13% sequentially. Back to you.
All right. Thanks very much, Abhishek, for that. Well, Muthoot is going to be in focus. Well, Nykaa and Patanjali are next on our radar. Mangalam has got both of those. Mangalam, morning.
Good morning. So Nykaa, steady performance coming in for their beauty and personal care business. Decent growth out there as well. The fashion business is struggling for them, and that's something that we've seen in the likes of ABFRL as well. So some distress in the consumer sentiment when it comes to fashion. Good growth coming in their other smaller verticals on account of a low base. So if you just take a look at revenue, 9% growth quarter on quarter. There's a 4% jump in the EBITDA. Margins at around that 5.2% mark. The net profit has increased, but that's on account of certain exceptionals, where the tax expense has been lower and the loss in associate also has been lower as well. Year on year, it's a 59% jump in their operational performance, so that's good. Total gross merchandise value growing by about 24%, and most of that being led by beauty itself at 24%. See some green on the stock. Patanjali, however, will see some red, and that's largely because there's been a sharp contraction in their margins. Understandable because of the correction that we've seen in oil prices, and edible oil business has reported an EBIT loss, whereas the food and FMCG business, which has the company's focus, has continued to grow upwards of 200% itself. 7.7% overall revenue growth. The net profit, however, has declined by 64% on a decline of almost 55% in their EBITDA.
Thank you very much for that. Today, Nomura has downgraded Nykaa to a neutral. They believe the margin improvement trajectory at Nykaa has been slower than what they were anticipating. The ad spends were also slower as D2C brands spent less and the launch of a new platform. So their target price is at 163. I'm also looking at Amara Raja Battery, where the earnings were below street expectations. The company's clocked in a mid-single digit top-line growth of 6.6%. It's also slower than the revenue growth that it's seen in the prior quarters. In the March quarter, the top-line growth was 11.4%. The quarter before that was 11.5%. So from a double-digit growth, it slowed down to a mid-single digit growth. Margins have improved on a year-on-year basis, but again, less than what the street was anticipating. So operating margins at 12.6% falls short of a Motilal Oswal estimate at 14.4%, and also sequentially, there is a margin contraction. So that's the reason why the profits have also missed what the street was anticipating. So negative set of numbers coming in from Amara Raja. But the other one on our radar is Voltas. Surbhi joins in with more. Surbhi.
Thanks so much for that. So it's a mixed bag for Voltas. Now, revenues are way above expectations, but the miss was on the EBITDA and the margins front. Revenues were up 21%, almost 13% above the poll. The gross profit margins on expansion of 60 basis points. EBITDA was up nearly 5%. Margins came in at 5.5% versus 6.4% same time last year, but a poll of 7.4%. So a disappointment on the margin front. In the cooling product segment, the revenues and the margins were a surprise. The revenue saw a growth of 16% and margins were also up 50 basis points. But the disappointment came in on the AC market share front. They've lost 130 basis points in the AC market share, came in at 20.6%. The EMP segment, the revenue growth was strong, about 49% on a year-on-year basis, but the losses continue to expand. This is the fourth out of 5 consecutive quarters where the losses have expanded. So that's a key monitorable for Voltas. A completely mixed bag, but I'm going with red for now.
Thank you for that. And here's a quick recap then of the top stocks today. Stocks with positive news flow are ABB India, ONGC, Glenmark Pharma, JSPL, NMDC, Muthoot Finance, Nykaa, while stocks with negative news flow are Patanjali Foods, Amara Raja Batteries and Voltas. We've got a lot of other stocks that we'll be talking about like Adani Ports, but for all that in just moments from now. Right now, let's go across to Manisha Gupta for a complete roundup of all the action from the commodity space. Manisha.
Well, thank you so much for that. Well, I'll start with the crude oil prices, which have posted 7 weekly gains, and we have seen the crude oil prices gain up by 20% in last 7 weeks. This week has started slightly on a lower side, and that is because the markets are awaiting very important economic data. Tomorrow, you have the China industrial production as well as the retail sales numbers coming in. So ahead of that, there's a bit of a choppiness into the markets. What also is trading under pressure is the overall metal sector. So the gold prices, after trading 3 weeks on the weaker side, are trading at a 1-month lows right now. Zinc is trading at a 3-week lows. Iron ore prices have declined to a 2-month lows. Even copper is trading at 1-month lows right now, even as the structural fundamentals are strong, because we've seen inventories continue to decline. But because of the weak economic data coming in from China and expectations that with the higher inflation, you could be looking at another rate hike from US are some of the factors weighing onto the markets right now.
Okay, all right, Manisha, thanks very much for that. We'll take a quick commercial break here. Up next, we have Rakesh Devan joining us, Prakash Devan joining us for a quick fundamental stock check. We'll discuss some of these earnings which our research team put out and, of course, what he likes in them. We'll also connect with Sanjay Thakkar of Landmark Cars. They reported a pretty poor quarter, Q1. So stay tuned. Those conversations come up next.